Good day, traders. Today I'm going to show you how I took this trade, but could have taken this trade. It's a huge difference, and in this video, I'm going to break that down for you. Alright, traders, we're on the chart on the daily for pound dollar. Yes, I have used the replay mode because it's a breakdown. I'm going to show you my thought process and exactly what I was looking at and give you an idea of how I took the one trade, but could have taken a much bigger trade. And just going to show you what I learned from it, what I did, what I think I did right, and how I could have improved on my performance today. So it will be an educational video as well. And then afterwards, I'm just going to do a bit of, let's call it promo, advertising for my community coming up, launching this Saturday, the 25th of June 2022. And I'm going to share with you a promo discount code if you want to get in on the action. I'm just going to walk through a bit of what's going to happen and show you a bit about what's going on. So let's have a look, just a quick breakdown on current price action. So just following where we're coming from, reacting off of this high, reacting off of this imbalance, price trading lower. This was the draw on liquidity, price traded through it, and we had then this sharp reaction back towards the upside. We kind of made this swing point with this low, higher low, and higher low to the left and the right of it, creating a swing point where we can then expect price to react off of, create that swing point, and potentially go higher. So the main bias for me was bullish, but what kept me hesitant was looking at the premium and discounts. We can see that for a couple of days we were just kind of hovering around, well actually 2 days, we were just kind of hovering around this area of 50% equilibrium. So we weren't really going anywhere. We were quite indecisive, but that's a good thing as well, because that means that something is going to happen. We're going to have some form of impulsive move, strong displacement in either direction, either towards the upside or the downside. So then I had to examine the liquidity in the most recent vicinity. Like, where's the most recent liquidity in terms of the daily time frame? So first of all, looking at the previous daily lows, we had those two lows that acted as draw on liquidity. So the first expectation was to see price run those lows, make a liquidity grab on all the liquidity below those lows, and then make them move up higher. If we were to go to the downside and maybe reach for something down here, then I would have wanted to see price first sweep these highs. These highs, potentially sweep those highs and then trade lower. So all in all, I was looking for price to first grab liquidity and then go into the opposite direction. So that was the thought process going into this day. Then on the 1 hour, now we're going to just quickly forward to where we had the end of Asian session. Okay, so there we had the end of Asian session. We can see how price came down and was just very choppy and consolidated in this area. So not a lot of excitement or nice things happening in here. But we have to look at the 1 hour and identify where is the 1 hour liquidity. So we have this low, which is then a previous daily low. And we have this one as well, another previous daily low. You can see them just marked to the right. So in my opinion, when I woke up, looked at the charts, this was the most obvious draw on liquidity for me. And seeing that the Asian session was already down, previous end of New York session was already pushing down, kind of gave me the idea that price is going to be hunting these lows for liquidity below those lows. I wasn't too much concerned about anything on the left-hand side because, to be honest, this week there wasn't anything for me on the 1 hour to base a trade off of. So I was purely looking to see a reaction below these areas to then take a trade off of, potentially towards the downside. Now, if we have to be honest with ourselves, if we trade off of 1 hour areas, we most likely look for 1 hour liquidity areas as well. So this is probably one area where my mistake was. So this is the obvious buy side liquidity, and why? Because it's the relative equal highs that we had on the 1 hour. You can see how it kind of gets flat over here, It's relatively visible. You can see it kind of just goes flat sideways. Means there's equal highs potentially on the lower time frame, but that's the most likely drawn liquidity, followed by this high and then this order block potentially. So that kind of set the stage for where price could potentially be trading to, if we reacted off of these lows and if we don't go all the way down. Obviously, there's different internal range liquidity areas. For example, this imbalance could be filled again. So those were the three main areas that I was looking at to see price trade back into, for higher time frame targets. So now you needed to wait for session opening, needed to wait for Asian session to play out, London's Frankfurt to open, and then a London session to open as well. So dropping down to the 15 minutes, this is that all being transposed here. I'm just going to quickly play forward to just before London open. All right, so this was 15 minutes before London open, and we can see that the Asian session was just trending towards, just pushing down. Where's my pen? Asian session was just trending towards the downside. There were no real structure or sideways moving market. Price was just really going flat, creating all of this trend line liquidity over there, kind of creating like a cup type of thing. But this was all liquidity because there was only mitigations. There was no sweeps off liquidity, so it wasn't fulfilling the liquidity requirements. It's something I speak about in the course. It was only creating liquidity in this section. So this is creating liquidity. This is fulfilling liquidity. But that is more of that in the course. But basically, that is where we would want to see price go back to if we've seen a sweep or a reaction off of one of these areas. So had to wait for the London Open. Nothing really showed in Frankfurt Open. We just saw some kind of push, not really giving us anything clean or clear. And then the next candle really started pushing towards the downside. Yes, we traded below this low, but just first 15 minutes of London Open, and the next candle traded even lower and left this wick. So this is now already evidence that we could potentially see price reacting bullish towards the upside. So this is the scary point, and this is where people often think you're crazy if you show entries like this. And I had a few DMs in my Instagram when I shared this post, is like, why did you enter there? How did you enter this? And this is me sharing now the thought process behind it. Basically, the idea is bullishness from the daily. So I'm getting the ideas from the bullishness. I'm noting that on the lower time frames, I haven't annotated or trying to keep the chart clean, but I've noted how this was liquidity. This needed to be taken out. We had liquidity below this low and below this low. So this is all the sell side liquidity. We want to see the sell side liquidity taken out before going higher, reaching for buy side liquidity. So this was the narrative. The idea was set. And when I anticipate the daily potentially going higher after sweeping this low and this low, when I saw that price is actually going down to sweep the liquidity below all of this, below this low and below this low, I just needed to wait and see if I can potentially find an entry pattern in this area that will give me confirmation that price is going to go towards the upside and then take a trade. So let's jump down to the 2 minutes. So we're on the 2 minute. I'm watching price and I'm seeing this imbalance form. So I'm going to add the same notes that I had swept previous daily low. I think it was something like this, or trade below previous daily low. We had this bearish candle sweeping the liquidity below this low. And inside this candle, inside this range, we found this area of imbalance. So that was my basing zone, or so technically this is my zone that I want to trade off of. Okay, I'm going to place a limit order. So I placed my limit order just above, well, actually just on there. It was 21730, I think. We'll check. I think I'm gonna post a screenshot of that entry. Stop loss I placed just below the wick body close of this candle that created the imbalance. So it was about 6 pips stop loss, which is a lot considering, well, it's not a lot for GU, but it's a lot considering what you see on Instagram, 2 pips, 3 pips, but also with current GU range, it's quite a decent size. And for some reason, I only targeted these this low. So that was my trade idea. 6.2, almost 7R. I was happy with this, and I wanted to be in and out. So I knew we still had the liquidity objectives above, but I also kind of feeling sick and down the weather. I didn't want to watch the trade or feel anxious. I just wanted to bag the 7R, 6R, and be done with the day. We didn't yet have any structural breaks. So on the seconds time frame, I know this is now, maybe you'll hear seconds time frame and be like, no, this guy's stupid. But this is the swing point. Try to imagine price trading down, pulling back up, trading above this high, and then trading lower. So that's the swing point. If this high breaks, we're looking for a confirmation the price will come back down in and go towards the upside. That's the idea behind the trade. So I'm going to just press play. There we see price traded above this area, started to come back down, tapped into the trade, gave a push up. Now we're starting to see price creating some excitement. What did it leave behind? It left behind equal highs. What's above equal highs? Liquidity. So this is price now giving itself reason to go higher, to take the liquidity above this high, and then ultimately run towards the upside. So we see price then trading towards the upside and ultimately really beautifully smashing the target. So this was in total 50 minutes, 45 minutes for 6%. If you rest 1%, 6% on your capital, which is not a bad trade. But let's see if we held for the remainder. If we held for this imbalance that's on the daily, sorry, on the 1 hour, we would have had a really beautiful day, and we could have really went and flexed. But what if we wanted to flex even more? Target maybe this area. Could we have done that? Well, obviously, anything's possible. We could probably have trusted our analysis and see if it played out. And who knows, maybe we get lucky and price reaches for that liquidity areas. Perfectly reaching for those liquidity areas. So what could I have done better? Could have still taken majority off, but I could have left a percentage of the position on the trade to reach my higher time frame areas. Because not every day you're going to get a trade that's going to run and reach all of your liquidity objectives. Some days it's not going to, and it's going to reach maybe something and then just continue flopping down or whatever. But for those days that price really makes a run in your direction and you get it 100%, make sure to capitalize on those days. So I want to leave you with that, and I wish you a good night. Hope you learned something from this trade and learned something about management as well. And yeah, let's quickly talk about what's coming next. So the website is finished. It's looking amazing. The developer really did a lot of great things. I'm really excited for everything that he's done. I'll still do a shout out to him, but the community, the everything looks just amazing. The everything from the icons, the text to all the detail really came along really nice, and we're really excited about the product that we're launching and just the community and idea that we have with this. So you can go and read through this. I'm going to link the website in the description, so have a look at it. But it's dwfxtrading.com. Have a look at that. When you get to course content, this is the important section where you get all the information. We have our introduction, welcome, the Discord community, setting up TradingView, just the tools that I use in TradingView. Toolbox, some of the basic things that we use, session timing, buy and sell zones, key zone identification. So those are the main things that I look at when looking for areas to trade off of. Talking about premium discount, talking about highs and lows. We have some more lessons planned for this, but I want to do it in a group setting where I record it and we have Q&A that will add more value to this course for future students. And then the main source in the liquidity section, a nice two-part section on the introduction, internal, external liquidity, liquidity profiles, liquidity ranges, and liquidity objectives. I think all of those are really, really interesting topics and really insightful lessons that I do think will add a lot of value to your trading. Market structure. This is one of the, for me, the best sections. Market structure and order flow. And I think this is probably the area that would separate us from any other community. I don't want to be too forward or talk too much or be a big mouth about it, but I do think that my approach is different. And you might resonate with it and it might be of great value to you, or it might not be. So let's see. This is a good session. Is it a break or a sweep? That's one of the old questions. Like, how do we know if it's going to be a sweep or a structure break? Well, if you understand all of the above, this becomes an easy section to understand. So that's very good. The process, putting it all together, obviously, how do we do the daily, the 1 hour, the 15 minutes, and then an example on a trade, taking it from the top to the bottom. Talking a bit about entries, the entry types. I have 3 main types that I look for. The trade example that I've shown you is a pattern C or type C entry pattern. And then we have some examples and then looking at managing the trade and then looking at high time frame entries. If you just want to enter from 5 to 15 minute time frames, how do you do that? What's the steps that you can take? Applying the knowledge there, applying it to this time frame. And then extras, talking about journaling your trades, building the trading plan, and charting process and rules. This is like a checklist building. We do this together. And this is the mini lessons where we will expand on even more. But it's just mini lessons, 5 to 7 minutes on different various topics that's covered in all of the above. And we just add mini lessons to the course as we progress and as we get questions and as things arises for us to give some information on. So guys, that is it in a nutshell. So if you want in, the promo code will pop up on the screen, hopefully. It's DW Special 10, which will give you 10% discount, and it's only going to last till the 29th of June. From there on, it will be full price. So the price is in ZAR, South African Rand, and it amounts to more or less $289 or $280, depending on the currency. Currently, our exchange rate is rather weak, so you might get this for less if you pay in dollars. So hope that works out for you. But this is a fixed price in Rand. So that's it from my side, guys. I wish you a wonderful day, wonderful rest of the week. Enjoy the rest of the week, enjoy the weekend, and we'll see you again. Bye.